Why most people fail at trading? It's not the market. A lot of people believe trading is difficult for one reason. The market is unpredictable, too volatile, too risky, too competitive. And that sounds reasonable because when you lose money, it feels like the market is the problem. But here's something uncomfortable. The market is not the reason most people fail, because the same market that frustrates one person quietly pays another. Same charts, same conditions, same opportunities, different outcomes. So the real question is not what is the market doing? It's what are you doing inside the market? And this is where everything changes. A while ago, I noticed a pattern. Not in the market, but in people. Two professionals, both learning trading at the same time, both intelligent, both serious, both willing to put in the effort. They watched the same tutorials, used similar strategies, started with the same intention, but a few months later, their results looked completely different. One was improving, calm, structured, consistent. The other was frustrated, inconsistent, emotional, always adjusting. And at first, it didn't make sense because logically, if strategy works, both should get similar results, but they didn't. And that's when something became very clear. The difference was not knowledge, it was behavior. Most people don't fail at trading because they don't understand the market. They fail because they can't execute under pressure. Because trading is not just a skill, it's an environment. An environment that exposes impatience, fear, overconfidence, doubt, and if your system is not designed to handle that, you will struggle no matter how good the strategy is. Let me explain this in a simple way. Think about something simple like driving. Almost everyone knows how to drive. The rules are clear. Stop at red lights, stay in your lane, control your speed. But not everyone is a good driver because driving is not about knowing the rules. It's about applying them consistently under pressure, traffic, unexpected situations, distractions. Trading works the same way. Now, here's where most people go wrong. They focus on learning more instead of controlling their execution. More strategies, more indicators, more information, and it feels productive because learning gives you a sense of progress. But trading doesn't reward knowledge alone, it rewards controlled behavior. Let's make this practical. You learn a strategy, clear entry, clear stop, clear target. On paper, it works. But then you start trading. One day you feel confident, so you increase your risk. Another day you feel uncertain, so you skip trades. Then you see something new and you adjust your approach. And slowly the system breaks. Not because it didn't work, but because it wasn't followed consistently. This is why many professionals struggle, especially those with full-time jobs, because by the time you sit down to trade, your mental energy is already low. You've spent the entire day making decisions, solving problems, handling responsibilities. So when you enter the market, you're not operating at full capacity. And in that state, emotional decisions become more likely. This is where most trading advice falls short because it focuses on strategy but ignores structure. And without structure, execution becomes unstable. This is exactly why I built the 3C trader method around three things: not complexity, stability, clarity, control, consistency. Clarity means you're not jumping between strategies. You have one defined system, one process, one approach. Because when your path is clear, you remove hesitation. You don't sit down asking, what should I do today? You already know. Control is what most people underestimate because it doesn't look exciting, but it's what protects your system. Control means you define your rules in advance, when to enter, when to stay out, how much risk, how much time. So instead of reacting emotionally, you follow structure, and then there is consistency. This is where results come from. Not intensity, not motivation, but repeatable execution. Because trading is not about one good trade, it's about many controlled trades over time. Here's something most people don't expect. You can have a profitable strategy and still lose money simply because your execution is inconsistent. And you can have a simple strategy and make steady progress because your execution is stable. Think about it like this. One person keeps adjusting, follows emotions, trades inconsistently. Another person follows the system, uses defined rules, shows up consistently. Same market, different outcome. And this is where the real shift happens. You stop asking, what's the best strategy, and start asking, can I actually follow this consistently? Because the best strategy is the one you can execute under real life conditions, when you're tired, when you're busy, when you don't feel like it. Let me give you a grounded example. A working professional finishes their day. They have maybe 30 to 45 minutes. One person spends that time checking different setups, watching videos, second guessing decisions. Another person logs in, follows a defined process, executes one system, same time, different structure. Over a few months, the difference becomes obvious. This is the part most people don't like because it sounds simple, almost too simple. But simple is what works because simple systems survive real life, complex ones don't. And real life matters. Busy schedules, low energy, unpredictable days. If your trading system cannot handle that, it won't last. So when people say trading is too hard, what they often mean is, my system is too unstable, too many decisions, too much flexibility, too much emotion. The market is not the problem, the lack of structure is. Once you understand this, everything changes. You stop chasing new strategies. You stop reacting to every movement. You stop overcomplicating the process. And instead, you build a system you can control. Because in the end, the traders who succeed are not the ones who know the most. They are the ones who can execute clearly, under control, consistently. And when that happens, trading stops feeling random. It becomes predictable, not in outcomes, but in behavior. And that's what creates results. So if you've been feeling stuck, frustrated, inconsistent, it might not be the market. It might be the structure behind your decisions. Because once your system is stable, even a simple approach can outperform almost everything. That's the difference. Not the market, the way you operate inside it.